Alrighty, good morning, everyone. It's been a little while now. Um, I want to just jump right into things just so we can get started here. So, want to do a really quick review of last week. Looks like there wasn't much going on, but just want to look at what happened here on Monday. Just before the open, we came right into our major eye level here at 4,200, and then the market started selling off going into the beginning of the week. Came down just into this 40-80 area, more so coming right back into this major resistance area that we got towards the end of last week before the breakout and could not break through. So the bulls defended that area there. We got a nice double bottom and attempt to break out. And then at the end of the week here, you can see going into the overnight session on Friday, what was more like Thursday afternoon, we came right into the next minor eye level here and went ahead and failed. And it's been just kind of a choppy situation all through last week. And coming into this morning, you can see that we're still playing around basically right in between the range of last week. So not necessarily a beautiful area to be trading in, but let's go ahead and take a look at everything. I'm going to jump up and take a look at our higher time frames. It's been a while since we've been up there, and our 3 month officially closed on Wednesday of last week. So looking at that candle, we have a very clear divergence off the low. So for whatever that's worth right now, we do have the argument for a bullish divergence. And we did end up bouncing just right around that 38% retracement level that I told you as we were selling off back up here at 4,400, 4,200, that we were more than likely going to be come down into 3770, maybe even get into 3450, or maybe come test this major swing back at around 3300. And so far, we've come down and essentially done one of those nice holds off the 38. And it's very often that we do see those 38 bounce 50 bounce 61 type situations. I don't think that we're out of the weeds for the bulls right now, but the bears have been very strong, and given the global and domestic situations, I would expect to see the market to come down and test these deeper levels. But for now, we are holding the 38 retrace. We got to bounce out. We have a nice 3 month potential bullish divergence off that major low that we made down at 38.0750. And we find ourselves basically right in the middle of not only the weekly range that I just mentioned, the previous weekly range, but right almost in the middle of the 3 month range right now. So that's what we're seeing up here on the 3 month. On our monthly, we have a very pretty much a doji, right? It looks somewhat similar to that 3 month bar. Huge wick to the downside again, right off that 38% retracement area. And now our new monthly bar is opening here right about where we found the open and close of last month. So we're at a critical point here. If we can continue to push and get through the last month high right around 4,300, it could mean that we're going to get some type of attempt to break out. But I'm telling you right now, all these breakouts to the upside are basically to fade for lower. So even if we do start to break out, I'm very skeptical of any type of break to new highs or test of the all-time high. I would expect some type of breakout and then a failure to fake all those bulls out. So there we are on the monthly, opening just above where the previous monthly bar closed. And we will technically, it's going to take a while for me to put any type of weight on what I'm seeing here right now, but we might also have a potential bullish divergence on the monthly. Again, we won't know until the end of this month now. So I'll continue to watch it and monitor it. From the low of last month, there is no divergence. But if it closes the way it looks right now, we very well might have a monthly bullish divergence as well. That would then give us a 3 month and a monthly bullish signal, which is pretty significant. And then you can see from the weekly perspective, off the major low at 38.0750 here, we also have a bullish divergence on the weekly. So if that monthly ends up closing and we have that, we'll have a huge swath of time frames giving us bullish clues. Now, right now, we've actually bounced out and attempted to break out to the upside, but we failed just in front of the 50% retracement of the whole sell-off here. So if we look at this leg down from all the way up at, what was the actual number, 46.31, all the way down to that 38.0750 level, we essentially came just in front of the 50% back. I forget what that was. I think going into Monday of last week, we came right up in front of it. We failed right at our 4,200 major eye level and are pulling back right now. We also do have a bearish divergence from that weekly high from last week. So let me go back to the monthly just does not have enough resolution. It's just way too zoomed out. But on our weekly, we have a bearish divergence off of the last week's high. And I believe the daily as well, when we came up there, again, this was, I believe, Monday morning, we came up here and got another bearish divergence on the daily. So our weekly and our daily gave us a bearish clue. And the market did go ahead, like we said at the beginning here, and pull back and hold right around 4108, bounce out, and then came right down into, again, this major swing that we were watching, I think. I think I might have marked this at the end of not last week because I wasn't here, but the week before it. And if you look, if I carry this over, and I probably would have to just do this here, say bring it out to the 5th, you'll see that major swing there is where the market came into, and the bears just did not have enough strength to break through. So we held it there, and now we're stuck again in this tight range over here. So even though the daily and the weekly gave us a nice clear bearish signal, the bears could not break through that major resistance zone from earlier the week before. So we're stuck in that tight zone. Pretty much every daily bar here is basically the same exact range. So ideally what we want to see this morning, like I said, is getting up through that previous weekly high at 42.02 quarter in order to have any kind of faith for a continuation by the bulls. And then if there isn't enough strength for the bulls to go ahead and break through there, and this is actually, I have to extend these out now, that is going to be the 50% retrace of the whole push down that I mentioned. So let's bring this out to maybe the 10th, just so we have it on there, and then we have the 61.8 up here. So let's go ahead and bring this out as well. So that's where we're at this morning as far as the kind of larger perspective here, just zooming out and looking at the bigger ranges here. If the market does end up coming down and breaking through our previous weekly low down here around 40.7150, we do have the major retracements down for this whole bounce up from 38.0750 to the last week's high up there at 42.02 quarter. So those are the larger retracements to the downside and the larger retracements to the upside. The actual numbers, we've got the 50% retrace of the whole push down sitting here about 42.18, 42.19 quarter, and then the 61.8 a little bit further up we have at 43.1650. You should have those numbers on there, or those lines on there from last week, because they haven't changed. And then these numbers down here are all the same retracement levels that we were watching. Maybe not, because we came in on Monday and obviously I wasn't here. So let me just mention these. If the market does go ahead and pull back through the previous weekly low, we'd be targeting down into these major retracement levels: 40.5150, 4005, which is actually sitting right in an interesting pocket there that we'll look at on the 60-minute chart. And then we've got the 61.8 here at 39.58 quarter. All right, so those are the bigger retracements. And I think that's basically it from the higher time frame perspective. Now I want to jump down and take a look at our 60-minute. And I'll just show real quickly here our major structure zones in the market. You can see that all of last week we basically held our 4200 structure zone came down right into our 40-80 area and basically held it. We got the probe through on that double bottom I mentioned a few minutes ago and have been basically bouncing back and forth within those two major areas. So again, breaking out either side will open us up to those larger targets. So let's look at our 60-minute here. We have every level that we're going to want to be aware of coming into the open this morning. You can see that, again, we're stuck within the previous weekly range, basically right in the middle of it. And do have a little 60-minute bearish signal there again off that high we just made. So it's very hard to give you any type of strong case for either side because we're going to have to wait and see who's going to win out here this morning, and maybe we'll take a look at the market internals once that I can start getting data on that end of things. So it's very hard for me to give you a clue. I do have, let me just go back to my 4-hour here. I do have a 60-minute bearish signal here from our overnight high. So right now, if we can't get through this high we just made at 41.59, what I'm seeing here is a pattern that would indicate a push down to test these lower levels. It doesn't mean it has to happen, especially considering where we are on the chart right now. But if we can't get through the overnight high at 41.59, I would expect the market to come pull back and test into, and we have a nice smattering of levels here. We have our major eye level 41.42. We have the 50% of Friday's price action right above that, and then right below it we have the orange power level. So if that 59 doesn't holds there, that would be that first little pocket that I would expect there to be some potential support if there's going to be. And then we've got this little area here, that high being 41.3450 down into 41.3150 here, that to me looks like a pretty relevant little area there for potential support if we do break through that first area I mentioned. A little bit further down from there, and we're going to be getting right back into 41.08 and then the low of Friday. I do have a fib retracement from the low of Friday to the high of the overnight session here. I have it on the shorter time frames, so I'll look at that when we get down to our short time frame charts. But outside of 41.40 to 43, and again this 41.3450 to 31.50 and the 41.0850, I don't see anything else that really sticks out to me. Outside of this one red line that I believe when I got to my charts last week and I opened them up, I threw this on the chart here for some reason, and I don't remember what the reason was, but throughout the week it seems to have acted as a pretty good support and resistance level. Again, it wasn't the cleanest. We got a breakthrough to the upside there and then held here and then pulled back and bounced from it there. It's not really necessarily the best line on the chart, but I do think that there's something to it here. In fact, if you follow it back, this was also the major retracement level that we were watching as things were pushing higher here, and I believe that was the 38. So that being right there, you never know, could also be fairly relevant. So these are the few levels that I see in here, and again, it's just one of those situations where for 5 days we bounce back and forth in this area. So it's hard for me to hang my hat on one or two levels over any of the others. So it just is what it is. A little bit further, so that's 41.2150, 41.2175. And then through the low of Friday, it brings us right into the shaded region here, 40.70, let's call it 40.70 to 40.80. Any deeper than that, and like I said, once we get through this low of last week, right around 40.70, we've got the major retracement level 51. We've got the minor eye level at 40.42, which if you look back to May 27th was the low of the morning there, and then we went ahead and ripped all the way up to the major eye level. And then from 40.42, we come down to 40.23. the major retracement level that I mentioned earlier, sitting right here at our major eye level at 4,004. And then from there, we're down into this pocket that we've been watching for a while, 3980 to 3982. And then from there, again, the major retracement level and our major eye level at 3945. I don't know if it makes sense to continue just listing every single level here, but we've got 1450, we've got 3890, we've got this pocket here, 3850 to 3852, which we were watching all the way back, I think even 2.5 weeks ago. We never came down to test. So this pocket, this open pocket between 3890 and 3845, I believe we do have a potential for that 3850 to 52 to be a pocket for a bounce. And then from there, if we end up selling off aggressively and we break through the low of the last month down at 3807.50, we've got all the levels that we were talking about 2 weeks ago and 3 weeks ago and 4 weeks ago, back when we were selling off into these areas. So all these levels you should already be aware of. They should already be on your chart on the downside. On the flip side of things here, if the bears aren't strong this morning and they don't hold the overnight high, which it looks like so far, we've got a beautiful bearish pattern there, so it should pull back here. But if it doesn't and the bulls get strong, or even if it does pull back and we get a bounce and the bulls break through that high, we have to consider everything that we have up above us here. So let's bring this down, exaggerate it out. So we've got the overnight high. I'll just go ahead and put a little box there, 41.59, or yeah, 41.59 there. Once that breaks, I would be targeting right to 82 and 89 here, and then we're up to test the high of last week, just above the major eye level at 4,200. Any further from there, and we've got the major the major Fibonacci level up there at 42.19 quarter, which I mentioned earlier. And then we come up into, and again, all of these levels are levels that we've been talking about for a long time. So, after this morning, going into the rest of the week, if we don't end up breaking through or breaking down below these levels, I'm not even going to spend time mentioning them, because we've talked about them almost every single morning for weeks and weeks. So I'll just mention it here this morning. We've got 42.40 and 42.43.44 there. That is a little pocket that we could see resistance at. And if you follow this back really, really far, we had a really, really intense wick that came down right into that pocket there. So still think that will be relevant. A little bit further is our major eye level at 56.50. We've got a minor level just a couple points above that at 62. And then 42.84, 43.06, and then the next major retracement level up there at 43.16, 43.17, and then the major eye level 43.24.50, with the swing low sitting there at 43.20. So that's as far as I'm going to go. Everything else, like I said, should be on your charts. You should be aware of. And I think that basically covers everything coming into the open here. If we can't break below last week's low or above last week's high, it's going to be a messy situation. So be aware of that. And I think that's basically it. They're going to jump down to our short time frames here, and we'll see what kind of trades we can get coming into the open. But right now, like I said, just at the beginning of our pre-market, it looks like we're getting a pullback to come down and test into this 41.40 to 41.42 area. I think that's it, guys. So everyone watching out there on YouTube, have a great day. We'll be back tomorrow.